Thanks for tuning in, everyone. Welcome back. It's good to be back doing English session again. Right, so this is going to be our first part on news trading. Today's going to be NFP. Next Wednesday is going to be our CPI trade, and then on Monday we're going to have some theory session. So we'll talk more about it if we don't have enough time to cover a lot of the stuff here, because I need to do this really quickly. We've only got about maybe 20 minutes tops in terms of explaining what NFP is. So welcome and thanks for joining in today. So we are going to be looking at the NFP numbers together. We'll take some trades and I'll show you some strategies on how to actually trade the NFP numbers. Hopefully, if we do have enough time, then we'll take a look at the previous month's NFP numbers and kind of give you guys a little bit of a picture on what to look at. All right, so just a quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. And just to add here, we don't offer any fund management services, signal services, etc., etc. We don't do that. So yeah, anyone approaches you guys saying that it's from OctaFX and stuff like that, offering this and that, don't listen in. Okay. So there are a couple of bonuses, obviously, for participants. Obviously, we got the deposit bonus. We'll provide you with the promo code later on, and also the access to the Telegram channel if you don't already have the access to the Telegram channel. OctaFX team will help out on chat in terms of how you can access the Telegram channel towards the end of the session. All right, a little bit about me, but I'm not going to spend too much time on this one here. You guys want to pause this and review it. There's a lot of stuff in there, but yeah, I've been trading pretty much for. This is going to be my 21st year, so 21 years, and I've built up a career as a analyst, senior analyst, technical analyst, strategist, whatever you want to call it. I was on BBC UK, Channel News Asia. Quoted by Times, Dow Jones Newswire, Reuters, and stuff like that. Bloomberg. So yeah, name it, you got it, right? But yeah, that's pretty much me. And I've been doing workshops pretty much globally. Dubai, Sydney, obviously that's where I'm from. Melbourne, Perth, Investfair in Singapore. I was a keynote speaker in 2016. Also as a keynote speaker for ATAA. Which is the Australian Technical Analysts Association, as well as the Australian Professional Technical Analysts, the APTA. All right, so that's a little bit about me. We can go on. I need to cover a lot of stuff. Okay, so tonight we'll talk about the unemployment numbers. We'll talk about the NFP numbers. We'll talk about the average wage as well. All right, so we will take a look at three stuff in one time. So a lot of people are confused that sometimes the NFP is bad, but it doesn't do so much for the dollar itself and stuff like that, because you're not looking at one single data. You're looking at three different set of data, which is the NFP numbers, the unemployment rate. These are going to be the two majors, and then we are going to be looking at the average hourly earnings as well. All right, so who collects all this data? That would be the U.S. Bureau of Labor Statistics. It's a federal agency that collects and disseminates various data about the U.S. economy and labor market. Also, its reports includes the CPI number as well as the PPI number. This is something that we are going to take a look at next Wednesday. But any fundamental stuff that we need to discuss, I think I'll leave it on Monday, because I don't think we have a lot of time to go through some of the stuff here. Okay, so in the data from the labor market, the most interesting are obviously the number of people employed outside of agriculture. This is going to be your non-farm, and as well as the unemployment numbers. At the beginning of every year, the agency, or the BLS, basically publishes a calendar with all the release date for the entire year. The unemployment data is going to be published. Unemployment and NFP numbers are going to be published every first Friday of the month. There are a couple of exceptions. If there's a holiday that happens on that Friday, sometimes it moves it. But for example, Good Friday on April, they still release the numbers. So again, it's going to be really dependent on what kind of holiday it is. That's one. If there isn't enough time to tabulate the data, like in February, where it's a shorter month, they kind of push it back to the second week of the month, right? So, second Friday of the month. So general rule of thumb, it's going to be first Friday of every month. Today's the 5th. This is the first Friday of the month of May, and this is basically what the market is expecting pretty much every month, right? Inflation data, the CPI, the PPI. The CPI is actually going to be published on the next Wednesday after the employment numbers, and the PPI would come in, I believe, on Friday, if I'm not mistaken, but it could be Tuesday, Wednesday for the CPI numbers, but just a general rule of thumb is typically on a Wednesday. Okay. All right, so let's take a look at the NFP numbers. So what is the non-farm payroll numbers? It's jobs added or lost pretty much every month except for the farming sector, right? So the NFP report is a monthly release by the US Bureau of Labor Statistics that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employment, and non-profit organizations. So market analysts and investors usually look for NFP figures above 200,000 as it is seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context in which it is released. And this week's NFP number is actually going to be a little bit unique. Number one, the expectation for tonight is actually a drop from 236,000 last month to the estimate keeps dropping every day, right? At the beginning on Monday, it was 186,000. The latest number, we've got 180,000 to about 181,000 in terms of the consensus. So the consensus has dropped. Now this is also the first time the number is going to be dropping below 200,000 for a good few months, right? So it is very interesting. In terms of the context on when the NFP number is going to be released today, all right? We just got the FOMC that hits their interest rate target, which is at 5.25%, or terminal rate, or whatever you want to call it, but that's basically the projection that the FOMC provides. The limit so far in terms of their economic projections is at 5.25%. So FOMC kind of used up their bullets, taking the interest rate to 5.25%. Now, and that's going to be a very interesting scenario because we don't know how the impact is going to be. In terms of whether it's a bad number or if it's a super good number, we don't know, right? That could be a surprise to the upside. That could be a surprise to the downside. Number three, in terms of the banking crisis, I wouldn't call it a crisis, but there are some issues with the regional banks in the US, and the latest one is PacWest. That's the shares has been dropping. We've got the First Republic that was taken over by JP Morgan. So there's a lot of buzz going on, right? And this negative sentiments, or in terms of a global economic slowdown, a potential global recession, issues with the banking sectors in the U.S. in terms of the regional banks, all of this are going to contribute to a potential run towards safe haven, right? When we talk about safe haven, we would classify a few currencies, such as the US dollar as a safe haven, the Japanese yen as a safe haven, the Swiss franc as a safe haven. In terms of assets, typically gold is considered a safe haven assets as well. So we got a lot of interesting things today. So there's a lot of variables to think about. So in terms of the context on when these news are going to get released, there's never going to be an easy answer to this. But when it comes to fundamental analysis, it's not just what the data says, right? We need to understand what to expect from the data depending on the situation in the market. For example, the inflation numbers compared to the NFP numbers, the inflation numbers for the past 2 years has been the focus for the market. It wasn't the NFP numbers, right? If nothing happens in the market, then yeah, I guess NFP is considered a high impact news. It would typically be one of the most volatile news releases, but the CPI, or the Consumer Price Index, or the inflation numbers, that has taken the number one spot in the past 2 years, I would say. All right. Okay. So NFP data is again a very crucial indicator of the state of the US labor market and can significantly impact financial markets. A figure that falls below the market expectation may be viewed negatively, but again, you need to look at the context, because what I just said in terms of the context of the market, if we get a negative number, a really, really negative number, it might boost the US dollar, because the market might be concerned, hey, the labor market is contracting really quickly. There might be a need for a run to safe haven, and that could boost the US dollar up, even though the NFP number could come in as a negative. So in terms of how to trade the NFP, obviously there's a couple of strategies, but let me just give you a warning before we go on to the charts and stuff like that. We need to look at the context, right? But assuming the market is normal, a figure that falls below the market expectation may be viewed negatively, while one that exceeds expectation may be viewed positively, and this would be in terms of whether it's negative or positive for the US dollar. Okay, so NFP figures are closely watched by traders and investors, particularly in the forex market. Currency pairs like the Euro USD, the dollar Japanese yen, dollar Canadian, pound USD, Aussie USD, they tend to exhibit high volatility in response to the release of the report as well. All right, so tonight we don't have a ton of time, right? We don't have a ton of time to kind of give you an example on every single currency. So I'm going to pick the Euro USD and the pound USD. These are going to be the two currencies that we are going to focus on today in terms of how we're going to be trading this. I still have 9 minutes, so let's talk about the unemployment rate, okay? Because this gets released at the same time with the NFP numbers. So the way we look at it is that the unemployment rate carries a significant weight to it as well. Okay, the unemployment rate is actually calculated in percentage and is published at the same time as the non-farm payrolls. The unemployment rate is the proportion of the labor force that is not currently employed but could be. However, the statistics, if you guys want to know, the survey, it's basically just from approximately 60,000 households. Now, this 60,000 households is basically a sample size to represent the whole economy, and every economy does this. In the US, the approximate number of surveyed households is approximately about 60,000. It's not exactly 60,000, but it is approximately at 60,000. There are several criteria for it to be unemployed, though. A person must meet the following criteria to be considered unemployed. They must be without a job, duh, right? They must have actively looked for work in the past 4 weeks, okay? They must be available to start a job if offered one. Now, this unemployment rate can actually be traced back easily, because the second requirement here is that they must have actively been looking for work in the past 4 weeks, and this is pretty much picked up on the weekly unemployment claims, because if they don't work, they're going to claim some benefits from the US government. And that's where we get our weekly unemployment claims number. You tally up the weekly unemployment claims number, you can kind of get a rough estimate on what the unemployment rate is going to be. So this is a little bit of a trick there. So this is probably why, you'll see on the calendar every Thursday there's going to be unemployment claims, right? It's weekly unemployment claims. That's pretty much how we got all this number. People are just claiming government benefits because they're not working, but they're actively looking for work. Typically, I'm not sure how they do it in the US, but in Australia, we got a place called Centrelink. If you don't have a job, you go to Centrelink, you look for jobs there. At the same time, if you're looking, if you're requiring assistance from the government, that's where they give up the payments, right? But they require you to come in every week and, show proof that you're looking for work actively. Okay? If a person does not meet all three of these criteria, they are not considered unemployed for the purpose of calculating the unemployment rate. So the unemployment rate is very specific. They must be without a job, must be actively looking for a job in the past 4 weeks. they must also be available to start a job if offered one. So if McDonald's offer you a job and you don't have a job, you need to take it. That's pretty much it, right? For you to actually be classified as unemployed. Okay. All right. Let's pause for a little bit. I think we have a little bit of a time before we go on to the average hourly earnings. I think there are a couple of questions regarding NFP numbers. Am I going to open the charts? Yes, we are going to open charts, but once I go through some of the stuff here, because no point trading the NFP numbers if you don't have a clue what it is, what it's for, what you're looking for, what you're supposed to be looking for. All right, so be patient. We'll get there. We have a surprise positive NFP number and surprise and positive unemployment number. Which side does the market reacts the most to? Again, depending on the context, but typically the unemployment rate carries a heavier weight to that. So let's say the NFP numbers. This is actually a very good question, and this is something I need to talk about now. With the NFP numbers and the unemployment rate, the numbers for it to be positive has to be the opposite, right? So we need to see an increase in NFP. We need to see a decrease in unemployment rate for this to be positive for the US economy. If the NFP number comes up positive, but the unemployment rate also goes up, we need to see by how far it misses the consensus, right? Like for today, the NFP number is expected to drop from 236,000 to 180,000 or 181,000. The unemployment rate is expected to jump up from 3.5 to 3.6%, right? So this is both are going to be negative for the US if that happens. However, if the NFP numbers drops down to, let's say, at consensus at 181,000, but the unemployment rate doesn't go up to 3.6%, it stays at 3.5%, then the drop for the NFP numbers below 200,000, it's not really an indication of anything, right? Because a drop from 236,000 to 181,000, it's still a positive gain for the month in terms of jobs being added into the market. If, however, the unemployment rate stays the same at 3.5%, this would signal that the labor market is actually pretty healthy. The unemployment rate doesn't go up. So there's always going to be three scenarios you need to consider. The NFP number goes up, unemployment goes down. Those are going to be some of your consideration. Again, if we take a look at these numbers, the numbers has to be inversely correlated, right? For it to be positive, NFP number needs to go up. The unemployment rate needs to go down. Okay. Okay, I'm not sure if there's any chance to win $100 from this webinar, but I hope you guys didn't join into this webinar just to, kind of go in for the quiz to win $100. Okay. All right, so I think we got that covered. We got a couple of minutes, 2 more minutes. Let's talk about the U.S. average hourly earnings first. Right. This is basically the report data that's going to be released every month at the same time as the NFP numbers as well as the unemployment rate. There's a lot to look here. I'm going to skip through the slides because I don't think we have enough time to go through all of this, but we'll talk more about this on Monday when we cover the theory sessions. But the average hourly earnings is also a key thing to look at, right? If job number keeps going up, but the wages doesn't go up with the inflation going up, obviously this is going to be some data that needs to be looked at as well. So with the inflation number going up, we do expect the wages to go up in line with what the inflation does. That's basically it. But this is basically your average hourly earnings per month. Okay. All right, let's talk about some non-farm trading strategies. We need to drill in two things here. Number one is pre-NFP trading. So the first one is a potential strategy to trade the market's anticipation of the NFP data release. So right now, if we anticipate the number to be weak, okay, so if we were to anticipate the NFP to be weak, we expect the unemployment rate to be up, then pre-market data, excluding all other factors, you would look at it and say, hey, you know what? I think this is going to be bad for the US dollar. We want to go along the Euro USD and the Pound USD. But you need to do this before the NFP numbers get released. So we're not going to be doing that today, okay? Because as I explained earlier, we are working in a very different situation currently because number one, the FOMC has reached their interest rate target at 5.25%. We've got the regional banking issues in the US that causes a little bit of a jitter in the market, right? There's a run to safe haven, so I don't think this is a good time to be predicting what the NFP number is going to be. But if you are that kind of people that trade that, some investors do this, right? I typically stay away until after the data. I don't typically trade during the data as well. But tonight we are going to be looking at the straddle strategy. This is going to be where we are going to be placing a sell stop and a buy stop to actually trade the potential breakout. Okay, so number one, you choose your direction, you make your predictions, you open your positions before the NFP numbers. Number two, this is a strategy that involves placing two pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP get released. So this is why I need to go to the chart right now to kind of show you how it's done, what to look for. This one here is kind of a no-brainer, and a lot of scalpers kind of do this, right? They don't care what the NFP numbers is. All they want to do, or all they want to see, it's the movement, and they want to see the volatility in the market. Okay, so we still got time. I'll explain the rest of them. Number three is actually fade the initial move. This strategy involves waiting for the NFP number to be released and observing the initial market reaction. Once the initial volatility subsides, look for opportunities to actually trade against the initial move. Why? Because it's based on the idea that the market often reacts to the NFP numbers and that a retracement or a reversal in the very short term is likely to follow. Okay, number four obviously is post NFP trading. You can wait for a few hours if you want to, or maybe wait until Monday to decide what you want to do before you open your position. Regardless of the strategy you choose, keep the following tips in mind. Number one, manage your risk. Always use appropriate stop loss orders and never risk more than a small percentage of your trading capital on a single trade. Don't jump with all of your equity in one single trade. Stay informed. Keep track of the economic news, right? Forecasts and market sentiments leading up to the NFP release to make better informed trading decisions. Be flexible and be prepared to adapt your strategy based on the actual NFP numbers and how the market is reacting to it, right? So we could get, again, as I say, we could get a bad NFP numbers. We could get a higher unemployment rate, but the market could react differently. If the market is thinking, all right, this is really bad for the US economy, let's go and hold on to the US dollar instead of being having our money in the stock market, let's move it to the US dollar. That's going to be a run towards safe haven, and that's actually going to be positive for the US dollar. So we need to trade news with context. This is something that we will talk about a little bit more in details on Monday. All right, so let me give you, we still got time, don't worry. 5 minutes before the event, we'll take a look at the charts. But this is what happens on April. So we have the pre-NFP range on the 7th of April, 2023. Take a look at the first thing that happens. We created two barriers, right? We basically have a buy stop and a sell stop. Once those are triggered, in this case, it triggers the buy stop, right? And market goes up. So you need to get out quickly because you have the option to, scalpers are going to be doing this, right? Market just went up, maybe 10, 20 pips, and they get out and they shout, hey, yeah, you know what, we did it and stuff like that. But immediately after that news happened, and this is going to be the case about 75% of the time, you're actually going to see a little bit of a reversal happening in the market. And this is what we were mentioning about the third strategy, which is actually to fade the news, right? So we will trade the fade, and the fade is basically this: the market often overreacts to the first market push, and then we actually see the market correcting itself, or we see a little bit of that pullback happening. Okay, so with the Dow Yen here, the actual release for the NFP was 236,000. The consensus was 228,000. The previous number was 326,000, which is a 100,000 drop, to be honest, last month. But yeah, we do have a pretty high numbers on the March, February numbers. Yeah. Okay, so this is on the Japanese yen. So if you take a look at the NFP numbers, the actual number is actually 236,000, which is 90,000 lower than the previous month. However, it's positive because it beats the consensus by just a tiny little bit. Okay. So same thing happened with the pound USD. Again, we created our range. We kind of block what the market is likely going to be doing. We create our orders and let it go. Okay, with that said, let's just jump into the chart and take a look at it. You can use the 50-minute time frame. You can use the hourly time frame. Whatever you want to use, completely up to you. But we want to focus on two things. We'll take a look at the pound USD as well as the euro USD. So get this ready. In terms of the better probability is actually going to be the pound USD because we don't see a lot of movement yet. The euro USD has already started moving earlier. Okay, so with the pound USD, want to identify what's the high. All right, so you got your options. This is on the 50-minute time frame. You would have it there, or you can have it here. All right, those are going to be your buy stop. So with price at the bottom right now, which is about 1.26, I am gonna get rid of this first, and we need to place a buy stop right now. Okay. So I'm going to place a buy stop, which is at about 1.2618, right? And in terms of the downside, right now, we actually don't have it as of yet because we got 4 minutes to go. And this is going to be the low that we have right now. So the sell stop would be there. So I got this fenced up, right? This is how it is. Ideally, I would want to wait until 2 minutes before, but I think 4 minutes before should be an okay time to place in your buy stop or sell stops. This is on a 50-minute time frame. You want it to be a little bit wider in terms of range, which is pretty much what's happening on the euro USD. You want to be looking at the previous high that we have. We want to create a buy stop there. In terms of the sell stop, you really want to have it pretty much just right where price is before the market moves. All right, we're gonna have this news in 3 minutes. In the meantime, I'll be looking at the chats. Irfan Bashir, can you tell me where to put stop loss on the correct place when using different time frames? Typically, you want to have your stop losses in either a Fibonacci retracement or levels, or a psychological price level, or if you want to make it really simple, it's always the swing high or the swing low if you want to have your stop losses. All right, let's wait for the numbers and I'll go through the chat. This webinar is recorded, so don't worry about it. You can always come back to this and go through it. NFP going up 2019, 2040, you're talking about gold, I guess. Why do you always go beyond stop loss to wipe capital during volatility? I'm not sure what do you mean by that. When NFP is going to change its direction, when does the NFP changes its direction? Typically, you don't actually have to wait long. Within the next hour, you should get a little bit of an indication. There's actually going to be a little bit of a trick on that, but we'll talk to you about it, I guess, after we see the initial break, because we are going to be doing the straddle strategy first. Once we got everything cleared, then we want to fade the initial move, and this is where we are going to be using our Fibonacci's to kind of figure out, whether or not you should start fading that initial move. Okay, so we'll be using the 15-minute time frame, and if you want to block your orders right now, we've got pound USD pretty much at about 1.26. We got a sell stop and we've got a buy stop. All right, we'll talk more about buy limit, sell limit on Monday. But for now, for the NFP numbers, just focus on the buy stop and the sell stop. Okay, so I don't know if you guys can see it here, but we've got 4 orders right now. Okay, we've got a buy stop for the Euro USD at 1.1047. You can have it at 1.1050. psychological level. Sell stop at 1.1006, or you can have it at 1.11. Sorry, 1.10. Okay, we got it. So yeah. So what's the number? So by the way, the spreads are gonna get wider, right? I placed my order over there. It doesn't get filled immediately. I think the market went down about 10 pips before it get filled. So you might actually see that happen, and this is why I don't actually trade the NFP numbers. But yeah, if you want to trade the initial reaction to it, this is basically what it is right now. NFP numbers is 253,000. This is much higher than what the market is anticipating. This is a positive. It is also higher than last month. This is a surprise to the upside. The unemployment rate is also down to 3.4% from 3.5%. Consensus was 3.6%. Okay, so we got super positive numbers for the US numbers. But again, you know, if you take a look at the market, see how it's kind of struggling right now. It's like, hey, I want to go down, but I don't really want to go down, right? If you can get your order filled before the NFP numbers, that would be better, because you would avoid the high spread that we're looking at right now. You guys notice what happens here with the euro, the pound USD? We've got our orders at 1.26. It doesn't get filled until about 1.2565. So I'm actually kind of, you know, with the volatility and the lack of liquidity, which should be something positive for me, I'm not getting it right now because of that extra spread, and there's a lag on that execution speed. So this is a problem with trading, you know, high impact news numbers like the NFP numbers. Your orders doesn't typically get filled immediately, depending on how and what the liquidity is in the market. In the case for this one here, we have our orders a lot higher. We didn't get filled until about 30 pips down. Likewise with the Euro USD, orders are still filled pretty much at an okay level for this one here. But remember, just now the order was actually at 1.1006, right? It doesn't get filled. It got filled in at 1.0980. So I just, you know, kind of lost about 20 pips on that one. Okay, but that's the straddle strategy. Is there any downside to it? Yes, there's a downside to it, because you will have to deal with that extra spread. You will have to deal with that lack of liquidity during news releases. And this is a surprise to the upside as well. Obviously, this is going to create a little bit of a movement, a huge movement in the market. Okay, so this is the initial hour for the pound USD. This is the initial 50 minutes. We're only 2 minutes into this. So if we want to trade the fade, we cannot trade the fade as it is right now. Okay, but that's how you place the order for the NFP numbers. You know, kind of highly dependent on whether or not on how quickly your order gets filled. Okay, so let's wait. What we want to wait for right now is we want to see the fade, right? We want to see the market reaches its limit. And obviously, we need to take a look at a lot of stuff for us to actually trade the fade itself. So let me go through this on the trading view, because it just makes it a little bit easier from my side. Okay, so what can we anticipate on the pound USD right now? Let's take a look at the pound USD on the hourly time frame. We got pivots pretty much holding it strong at 1.257. Price is still holding on strong, at least on the hourly time frame, but I think we're still looking at a little bit of a pressure to go to the downside. Do we anticipate a little bit of support coming in? Yes, we do anticipate support to come in at 1.2560, 1.2550. So if price gets to about 1.2550, because we already have a sell order on the pound USD, we want to see if this one get pressured lower. If it does get to 1.2550, then that's where we want to get out. However, if price goes higher than 1.2625, you need to get out of that short position. Okay, so we got several orders there, right? We need to cancel the other order because we already have our short orders. So we need to cancel the orders that we have here on the pound USD, right? So I'm going to cancel the buy stop order up there. Otherwise, it's just going to open up a position over there, right? So I'm going to get rid of that position. So it's gone. Now what I want to do is I want to look at in terms of placing my stop losses. So there are obviously two levels to look for in terms of placing stop losses. You need to look at those swing highs, right? This is on a 50-minute time frame. This is only going to apply if you're going to be trading this the short term, right? Swing traders, you're not doing this strategy. Trust me, you do not want to do this strategy if you're a swing trader. This is only for short-term traders. If you're scalping the market, or if you just really want that adrenaline burst during the NFP release, this is what you do, right? All right, in terms of placing stop losses, take a look at the resistances that we have, or the swing highs that we have. We got 1.2617 and 1.2635. I'll take something in between. So, all right, for the euro, for pound USD, I'm going to place my stop loss at 1.2630. So that's going to be my stop loss. I'm gonna modify the order, so I'm gonna have my stop loss there. Okay. So let's take a look at the Euro USD. What would be my stop loss? I'm going to take a look at it on the 50-minute time frame. We don't actually have a lot of choice. Our stop loss is pretty much at 1.1050. So I'm going to delete the buy stop order that we have because we already have a short position. Now we want to have our stop loss now at this level here, which coincides with a psychological price level, which is at 1.1050. Okay, got it, place it, done. And that's it. As simple as that. That's how you trade the NFP numbers. We just wait. As long as our stop loss doesn't get hit, we're gonna be in the trade. Simple as that. Now the next thing to do for this session, what we're going to be looking at is we're actually going to be looking to fade the current or initial run. One thing to note here, this is a very surprising number. All right, the expectation was 181,000, and I'm actually going to bring this to you guys on the screen. So take a look at the numbers if you want to. Okay, so unemployment rate 3.4%. Let's see if I can zoom in. But yeah, there we go. You got unemployment rate at 3.4%. Okay. And then the NFP numbers, this is where it gets a little bit interesting. The previous number wasn't at 236,000. The number that get released with NFP numbers comes with what we call a revision in the market. This was revised down to 165,000. So instead of 236,000 jumping up to 253,000, we actually get a much bigger jump from 165,000 to 253,000. Okay, so you need to look at past revisions as well. So previous month's number was revised down, so we actually get a much larger gain to that. That's probably why you got the unemployment rate dropping from 3.5% to 3.4% instead of going up to 3.6%. But this is what you're going to be looking at. Number three, it's going to be the average hourly earnings per month. The expectation was 0.3%. We have an increase to 0.5%. In terms of the yearly numbers for the average hourly earnings year on year, it was expected to drop from 4.3% to 4.2%. We got an increase to 4.4%. So all three numbers for this one comes in really hot. We call this hot, right? It's better than expectation. Way better than what the consensus was, okay? It kind of surprises the market because leading up to this, what if, and this is why I don't like strategy number one, predicting what the NFP number is going to be and predicting. I actually got this question just now on Telegram asking me, is it going to be positive or is it going to be negative for the US dollar? I said, it could go either way because if you were trading it pre-market, all right, pre-NFP numbers, so you would have placed a short position on the US dollar. You would be looking to go long the Euro USD. You would be looking to go long the Pound USD because you were anticipating the number to be negative, right? So this is something that I don't really like because when it comes to numbers like this, there's always going to be surprises in the market sometimes, you know. But yeah, we just kind of stay away from those surprises and just trade what the market gives. So obviously, number one, you can trade, you can block the market, all right? You can create a barrier if you want to. This is called the straddle strategy, right? You can create a buy stop, you can create a sell stop, and just let it run. Okay, can we take a look at the dollar Japanese yen? Sure. Okay, dollar Japanese yen. If you're a swing trader, there's going to be future sessions to talk about stop loss placement, but as it's kind of a guideline. Go through my videos on Fibonacci's. Go through my videos. Yeah, on Fibonacci it should be enough, right? We actually did a marathon session towards the last quarter of last year. If you follow through my webinars from I believe August until 31st of December, yeah, that's where you get started. But in terms of placing stop loss, I would go with pivot points. I would go with Fibonacci. I would go with psychological levels. I would look at previous resistance or support. I would look at previous swing highs or swing lows. Those are going to be your stop losses if you are a swing trader. Okay. Okay, let me go through the questions because I need to filter out what the question is here. Okay, Rahul, I don't know what you're frustrated with, but yeah, if you can contact customer service. Logically, it should make this US dollar stronger. Maybe it'll make a higher inflation number and making Fed increasing another basis points. Not necessarily, because inflation is completely different to the employment numbers. The employment sector used to be monitored during COVID, but the focus kind of shifted away a lot from it. Okay. Dollar Japanese yen. I think we discussed dollar Japanese yen before, but anyway, dollar Japanese yen for this one here. I would keep an eye out on one. Obviously, we got 135 and 135.50. Those are going to be the focus in terms of resistance for the dollar Japanese yen. But yeah, this is a good run. So how does the other yen crosses fare? If you take a look at the NFP numbers, it impacted the USD pairs a lot more. You don't actually see a lot of movement on the yen crosses, but because the yen moves kind of independently to because we take away the US dollar, there's actually a webinar on triangulation. Look it up on the OctaFX channel. We discussed this during triangulation. Because if we take a look at currency crosses like the euro yen and the sterling yen, we take away the US dollar factors out of it. The NFP numbers and the unemployment numbers has a primary impact into the US dollar pairs, but it kind of have a muted impact onto the other crosses. So if you want to trade, but you want to stay clear from NFP numbers, yeah, you can trade the yen crosses if you want to. But yen crosses comes with their own baggage as well. No volatility, only got $13. You can get $13, you can get $1.30, you can get $130. I don't know, depending on your lot size, obviously. But yeah, this is a little bit lackluster, I'll be honest with you. I don't like placing trades during news because, look, let me give you a comparison to what it is, right? My order is supposed to be filled there, which is at 1.106. Right, that's a huge drop before my orders get filled at 1.0980. That's 20 pips. So this is going to be very common. It's not a broker's fault. It's just how the market is, right? Because you're going to see an increase in volatility and you will actually see a shrink in liquidity. This is what do you want to call it? You want to call it a slippage? It could be a slippage, right? If you don't get a slippage, you're also going to get a wider spread anyway. So those are going to be the concerns that you should have when you're thinking about placing a trade during news releases. All right, for the pound USD, for example, on this one here, right? The fill in order was basically about 1.25, 1.26 actually. That was basically where it's supposed to be filled. I got filled on this trade here pretty much about 30-40 pips down. So you need to consider the risk when trading news releases like the NFE numbers. You might get slippage. You might get a much wider spread on it. Orders doesn't get filled. The order execution might slow down, right? You can take a look at what happened just now. You can review it live again. The order was placed. The order execution might take some time, right? Depending on the liquidity of the market itself. So it's not the broker's fault. It's just the mechanics of how the market is during news releases. So this is something you need to be careful. Okay, so we are past the first 50 minutes. Should we start looking for the fade right now? Okay, should we consider having this position running? Should we consider closing those position right now? I'm profitable right now. I can close it out. I still got $70, $60. It just keeps changing, right? So this is for those that haven't opened a position. Let's say you don't have this running position. If you already have a running position, just let it run to whatever level you want it to be, right? We can go onto a higher time frame if you want to. For example, I can go into the hourly time frame on the Euro USD and look and say, hey, do I still have more room to go for this one here? I guess so, because Fib wise, I can still target a potential correction towards 1.0950. If we surpass 1.0950, I can go for 1.0925, 1.09 on the Euro USD. So let's add this in. All right, I'll make the take profit for the Euro USD. Let's modify this. I want my take profit to be at 1.0925. Pretty happy with it. Okay. All right. So I've got that placed in. So sorry, I'm looking at pound USD. Looking at Euro USD here. All right. So that's my take profit level there. You take a look at the stop loss and where we got in. We pretty much get about 1-to-1 risk to reward ratio. Can you start moving your stop losses? Can you? Could you? If you want to minimize the risk, you can do that, right? Initially, we got our stop losses at 1.105, but if you're concerned about whether or not, hey, is this going to kind of bounce back up? Should I be concerned about this? You can actually move your stop loss a little bit lower if you want to. You can reduce it by 20 pips, right? That's it. I can do that. Should I move it to break even? Obviously, I can't do it at break even because I didn't get filled at 1.106. I get filled a little bit lower than what I was expecting. So yeah, in terms of stop losses, can you adjust it? If you're worried about it, you want to trade it short term, yes, you can move your stop losses if you want to, or you can move it back. You can just say, you know what, I'm not too worried about it. Just gonna leave it at 1.105. Yeah, that's fine. I already got my take profit level. I got my stop loss. Let's move on to the pound USD. What can we do with the pound USD? In terms of the hourly time frame, the pound USD does have a little bit more support here. So how far can I target pound USD? Can I target 1.25? It's not reasonable, right? If you want to trade this, in the short term, you're looking at maybe 1.2550 at best. So we'll go with 1.2550 for the pound USD. All right, so I'm going to modify this 1.2550. All right, modify, and that's it. So right now we're seeing a little bit of a pullback in the market, right? This is what we call fading the initial move, right? So if you don't have a position, assuming we don't have any position right now, and if we look at the current movement in the market, we have a little bit of an overreaction in the market, right? You could trade this by going long if you want to. So we'll do that on a different currency pair. We'll do that on the dollar Japanese yen, right? So we got short on the Euro USD. We got short on the pound USD. So I'm gonna fade the dollar Japanese yen. I'm seeing a little bit of a reaction. I don't have significant reaction at this point in time because if we go by the Fib calculation, I don't think we have surpassed that 23.6%. Right, we are still, not even close to 23.6%. could I create a short order if I want to? Yeah, I could. I could create a an order here. I could do a sell stop over there. So if price goes to 23.6% and it goes down a little bit lower, in fact, I'll actually adjust it a little bit lower towards 1.13475 because that's a psychological price level. So if price goes to 134.75, then yeah, I've got a pending order, and I can modify my stop loss as well. I could have my stop loss at, I'll say, 135.25. Right, and I want to have my take profit level. I'll say about 134.37, about 61.8%. Okay, so done. So I got my orders placed. Now we just wait because we don't have enough information, at least not on a 50-minute time frame, that we are actually going to see that fade happening. At least not on the dollar Japanese yen, but on the Euro USD and the Pound USD, you might actually see this starting to happen already, right? Don't worry too much with the numbers here. If it's a little bit high for you guys, it's on a standard lot, so every pip is $10. So right now we're only negative 17 pips, so not to worry about it. Might look big, but it's not. Okay. So yeah. Trading the fade, we basically, what we're looking at right now for the fade is that we're looking for a little bit of a potential correction of the initial movement, right? Do we anticipate the market to reverse and kind of overshoot there? Probably not. We're probably going to be looking at a little bit of a pullback potentially towards where price was before, before it breaks out, right? And then it'll typically come back to that level and go short, follow the initial movement in the market. Okay, in fact, you can see this from the previous number, right? We also have a surprise to the upside. We've got initial market movement, market kind of stalls a little bit, and then pullback. But the pullback happens not immediately, but it's actually a few hours after that. It actually is the following day before we actually see the market pull back to before price breaks out. But once it comes back there, that's where you should be getting out on that fading trades, right? Because if you trade the fade, you are going against the market trend. You're going against the initial market reaction. So this comes with a risk attached to it. You will need to treat it as a very short-term trade. Okay, so this is not for swing traders as well. Okay, this is really for intraday traders or for scalpers in the market that just want to get in and out of the market quickly. These two strategies are okay. But if you are a swing trader, I would say wait at least 2 hours and then decide what you want to do with it. All right, do we see an initial rush in the market? Does the breakout continues and run to the upside, or does it correct itself, right? Or maybe you want to wait until Monday when everything is calm, right? Because right now, when this number get released, it's only the European market and the US market that's running right now. The Asian market is closed. Asian market will have a different reaction when Monday mornings come into play. Okay, so swing traders, and I'm a swing trader, from one swing trader to another, I would say the best strategy for swing traders is actually to trade this post NFP, right? You digest the numbers, look at it carefully, look at the initial sentiment in the market. Is there any other risks in play? Is there any other factors that you should consider before going into the market? This is going to be for you. You have time. I would say use that weekend to kind of plan your strategy, plan your trade for next week, because we already have the NFP numbers. We got the unemployment numbers. You got 3 full days to kind of think about what you want to, do. Okay. All right. Okay, let's go with the slide before we run out of time. Okay. So for some of you guys waiting for this, the promo code for this session is Nonfarm 2023, and I believe, I'm not sure, but I think this is going to be a permanent thing. Every NFP and every CPI, we are going to be doing trade live, right? We're going to be looking at the NFP numbers. We're going to be looking at the CPI numbers, probably with better context. Today is a little bit special because we just started this new thing, right? So I need to kind of explain, go into details on what the NFP numbers are, what are the average hourly earnings, which we just skip kind of because we run out of time, and then we have the unemployment rate. But you can use the promo code Nonfarm 2023. But yes, we're gonna have a very similar session, less theory, more practical, on Wednesday when we do that CPI numbers or the inflation, the US inflation number on Wednesday, which is on the 10th of May 2023. And on Monday, we are going to cover a little bit more on the technical side of fundamentals, I guess, right? So we'll discuss several news to talk about, how to actually trade the news and stuff like that, price action when news get released, and a little bit more less hectic time. This session we're kind of rushing it a little bit because we need to get into placing trades before the numbers get released and stuff like that. So we got general rules of news trading. I'm actually gonna add in a lot more stuff into the Monday session. So if you guys are always wondering, how to actually trade the fundamentals and stuff like that, look forward to the Monday session. If you have any questions regarding fundamentals, then come in to that session and we can talk about it. But yeah, in terms of, I think a lot of the questions that we have right now, it's that where do we place our stop losses? As I said, with the stop losses, the general rule of thumb is that you really want to have, you want to identify key levels. Number one, if you can't see it on the 15-minute time frame, you might want to go up to the 10, an hourly time frame and say, look, notice where I placed my stop loss. Where I placed my stop loss was basically around the previous swing high, right? And that's where I placed my stop loss. If you take a look at my take profit level, that was basically around the previous swing low. So I'm not really targeting anything crazy, right? Because really the stop losses and the take profit levels are still bound by whatever range it is on the hourly time frame for the pound USD. So the pound USD, in terms of, hey, is there a significant trend change for the pound USD? Look at it. It is still bound by a certain level. So I wouldn't say, hey, you know what, today's NFP with that surprisingly good numbers, is it really impactful? I wouldn't say so. Okay, cool. Is that the head and shoulder or 15-minute time frame? Yeah, it is. You're really good. Arinza, you were in my previous live sessions, and you were good at keeping tabs on head and shoulders. But yeah, there's a head and shoulder. That's probably why you see where my entries price, which is supposed to be my entry price, is pretty much at the neckline itself at 1.26. But yeah, if you picked it up, it's great. It's just that we want to focus on the fundamentals, so we don't actually have time to go through the technicals, and it seems rush, but this is the reality of things when it comes to trading the NFP numbers, and when it comes to trading news releases. You better come prepared, right? If you want to look at the head and shoulder pattern, look at it before you open the trade. So I was okay placing that trade there and pretty much at the neckline. It's just that didn't get filled at the neckline. Otherwise, I would probably give you a more fantastic view than having a negative $30. If it got filled, you're probably looking at, about 30-40 pips already, which is maybe you're looking at $300-$400 in terms of potential trades. But yeah, that's the reality of news trading. So I would say this is something that you seriously need to take into consideration if you want to trade the news during release. You're going to experience a little bit of a delay in your order getting filled, and that delay per second causes a lot of damage, right? You're gonna get a wider spread as well, so that's something you need to consider as well. So yeah, You got 4 strategies. You can trade pre-NFP. I don't like that because it's like looking at a crystal ball and thinking, hey, I think the market's gonna do this, blah blah blah. I don't like that. The straddle strategy, I like it. If you are trading news releases, I would like it, right? The fade, I would trade the fade as well. So right now, if you want to trade the fade, you can actually trade the fade if you want to. But how far up can you fade it to? You can only fade it not really far actually. You can probably only fade it sorry. You can probably only take it about there. Back to about 1.26 level if you want to fade it. But you have your stop loss pretty much at the latest swing low. But I'll be honest with you, 15 minutes, half an hour is actually is it enough for you to trade the fade? It is enough. I just don't like going against the trend. That's just me. Personally, I don't like going against the trend. So if we have a huge move like that and the number is like super positive, I would typically avoid trading the fade, right? And then number 4, you can trade it post NFP numbers, post unemployment rate numbers, post whatever data that you want. And this is my preferred scenario. Gives me time to think about what's going on. I can wait until Monday. I'm in no rush to open a position until Monday, right? So yeah, I got time to think about it. I can see the initial reaction today, whether it's going to be positive or is it going to be negative for the US dollar. And then we'll see how the stock market is. What's the reaction in the stock market? That goes into consideration as well for your Monday trade as well. What's the promo code? The promo code is Nonfarm 2023. So you can use this promo code if you want to. What's the promo code for? Team Octa, back me up here, but I believe this is doubling your deposit bonus. I believe so. Okay. Cool. All right, so you guys got that. I know it's rushing it a little bit, but again, this is recorded. You can always go back. You can review it. You can pause the slide if you want to. Take a screenshot. I would highly recommend you guys do that. Review what we just went through. Take a closer look at the 4 strategies that I provide, and that's basically how people are actually going to be trading the NFP numbers, right? So you got 4 different categories of traders that are going to be looking at trading it differently. Typically, though, people are actually sidelined if it's a huge event like an inflation numbers, the CPI numbers. People actually sideline until we see the initial reaction, and that's why you will actually see the market get stuck within a range before the news get released. So you shouldn't be too much of a problem in terms of determining where to put your buy stop or where you put your sell stop. But yeah, you can do that. All right. Thank you all. Have a fantastic weekend. Hopefully you learned something new about the NFP numbers. So it's not just that data every month. You got to look at it from a different context. You got to look at it from what's the previous number, what's the consensus, are there going to be revisions to it? We got a lot of stuff happening today. So hopefully you guys pick that up because we get that revision. We got a surprise to the upside. We got surprise number for the unemployment rate as well. The NFP number goes up. The better than the consensus, way better than consensus. And previous numbers was revised down. The unemployment rate also falls down as well. So I think there's a lot to learn. Okay, so yeah, good luck with your trades, and I'll see you on Monday.